They told you trading was about strategy. They lied. It's not about entries or exits. It's about staying calm when the market tries to break you, because the chart isn't just price, it's a mirror. And every time you click buy, it reflects who you really are. Today, you'll meet a trader who didn't conquer the market with luck. He conquered it by mastering himself. His name isn't famous, but his discipline is legendary. $5,000, no indicators, no secrets. Just a mind trained to move like the market, clean, fast, ruthless. This is the story of Ethan Park and how he became the kind of trader the market couldn't break. You wouldn't notice him if you passed him on the street. Just another quiet guy in a hoodie, sipping burnt coffee from a corner 7-Eleven, eyes heavy from too many nights staring at charts. No Rolex, no Lambo, just a mind that had been forged in solitude. His name is Ethan Park, and his story didn't begin on Wall Street. It began in a dim apartment in Koreatown, Los Angeles, with a $5,000 account, a refurbished laptop, and a question no trading course could answer. How do I stop sabotaging myself? Ethan wasn't looking for a strategy. He was looking for a system that could survive his own nervous system. The fear, the greed, the hesitation, the rush of false confidence after a green day, and the shame spiral after a red one. He'd been there. He'd overtraded after a win. He'd frozen on clean breakouts. He'd blown accounts chasing someone else's setup. And one night, after losing 22% of his capital in a single trade, he shut off every indicator. No RSI, no MACD, no guru watch lists, just the candles, just the volume, just the truth. He opened a historical chart of Tesla from 2013 and began replaying it, bar by bar, candle by candle. At first, he was just trying to see where he would have entered. But after an hour, something strange happened. He wasn't looking at the chart anymore. He was feeling it. He noticed how volume pulsed before the breakout, how price consolidated like it was holding its breath, how every explosion was preceded by eerie calm. He stayed up until 4 a.m. that night, then did it again the next night, and the next. It became a ritual, not glamorous, not exciting, just monk-level repetition. While other traders hunted for the next big thing, Ethan replayed First Solar from 2008, Shopify from 2016, Nvidia from 2019. He wasn't collecting strategies. He was burning structure into his subconscious. He called it his silent edge. And slowly, almost imperceptibly, something changed. He stopped flinching on volatility. He stopped chasing moves that didn't align. He started seeing setups before they formed, not because he was psychic, but because he'd already seen the story 1,000 times in 100 different ways. This wasn't backtesting. It was nervous system conditioning. While most traders practiced reaction, Ethan was building recognition. He wasn't trying to predict the market. He was trying to become someone the market couldn't shake. One night, while studying a failed breakout in an old biotech chart, he wrote in his journal, "The market doesn't care how much I know. It only rewards who I am when the pressure hits." That line stayed with him because he realized he didn't need more knowledge. He needed more identity alignment. He wasn't a scalper. He wasn't a gambler. He wasn't here to guess. He was here to master one thing: patience under pressure. The next few months became brutal. He stopped trading for a while, focused only on replaying charts, journaling his emotions, and defining one question for every single setup. Can I execute this cleanly, even if it fails? Not can it win, but can I live with the loss? That's when the real edge began to form. He realized the trade wasn't the candles. The trade was the moment before the click, the breath before entry, the story he told himself when price pulled back, the silence between the noise. Ethan wasn't building a strategy anymore. He was sculpting a self-regulating system, one that filtered trades through emotional bandwidth, one that said, if I can't hold this with peace, I don't deserve to enter. And soon, he was doing something rare. He was passing on great-looking trades because they didn't match his temperament. That was the turning point. He wasn't just trading setups. He was trading structure that matched who he was becoming. And when that alignment clicked, when the $5,000 account stopped feeling like a lottery ticket and started feeling like a workshop, everything changed. His win rate didn't skyrocket overnight. His P&L wasn't vertical, but his clarity did. His peace of mind grew. His conviction, once fragile, now had a spine. And trade by trade, day by day, candle by candle, he carved out something no one could take from him. A system built not on noise, but on obsession. The edge, Ethan would later say, was never the strategy. The edge was who I became while mastering it. When Ethan finally deleted the last indicator from his screen, he didn't feel free. He felt naked. For years, he'd leaned on them like crutches. RSI told him when to enter, MACD told him when to exit, Bollinger Bands gave him false confidence. And when it all failed, he blamed the tools, never the operator. But one day, after another perfectly textbook setup broke down and wrecked his confidence, he stared at the screen, fists clenched, heart pounding, and whispered, "What if the market isn't broken? What if it's just not listening to my indicators?" That question stayed with him. He opened a new chart, blank, just candles and volume. No overlays, no moving averages, no colors screaming for attention. It felt uncomfortable, like walking through a city you've lived in for years, but without Google Maps. He couldn't see anything anymore. But slowly, he started to notice things he had never truly seen before. He saw how price would tighten, almost as if holding its breath, how volume would vanish just before it returned in a tidal wave, how a chart would behave, not statistically, but emotionally, right before it moved. He began asking new questions. Not, is this oversold? But who's trapped here? Not, did the 50 EMA cross the 200? But does this chart look like someone's accumulating quietly? And that changed everything. Because Ethan realized trading wasn't about numbers. It was about narratives, emotion, pressure, structure, behavior. The indicators had made him a consumer of signals, but the market demanded a reader of behavior. He began studying how volume dries up before a breakout, how a clean range with rising higher lows compresses stress like a coiled spring. He watched how weak hands exited just before the real move. He learned that fakeouts weren't failures, they were filters. And he noticed a pattern. Every time a chart screamed too obvious, it usually meant everyone else had missed the preparation phase. That was the difference. The masses were waiting for confirmation. Ethan was watching for conviction. He began tracking charts like a psychologist reads a patient, not looking for confirmation bias, but for breaks in behavior. He understood something most traders never grasp. Charts are expressions of mass psychology, compressed into time, price, and volume. They aren't random, they're emotional fingerprints, and those fingerprints, they were everywhere. He noticed how stocks with clean trends had minimal noise, the kind of structure institutions prefer. And the messy charts, they were full of indecision, of retail panic, of unsustainable emotion. He stopped chasing those. He called them chaos charts. They might be moving, but they weren't worth moving with. Instead, he focused on clean behavior. The kind of charts where you could draw a single trend line and know exactly where your risk was. The kind of price action that didn't shout but whispered steadily, confidently, "There's strength here, quiet strength." The deeper he went, the clearer his system became. No indicators, no predictions, no ego. Just structure, volume, and behavior. One night, while reviewing a breakout on a biotech name that had surged 300%, he wrote this in his journal: "The candles never lied. I just never listened without noise." That line marked a turning point. He realized that every time he leaned on an indicator, he was outsourcing responsibility, letting something else decide, blaming the tool when things went wrong. But trading, he now understood, wasn't a game of answers. It was a game of observation, of noticing the subtle shifts before the obvious becomes obvious. He started trusting his own pattern memory. He could feel when a stock was ready, not from signal crossovers, but from behavior, tight ranges, volume clustering, controlled pullbacks, rising relative strength. He wasn't trying to catch bottoms or tops. He was trying to synchronize with the market's rhythm. And here's the irony. By removing the tools, Ethan became more mechanical, not less. His trades became cleaner, his stops tighter, his exits more logical. Because without indicators, he had to build rules rooted in price behavior, not colored lines. He designed criteria like only trade stocks with clean weekly structure. Enter on reclaim of VWAP only if volume confirms. Avoid any chart that makes you hesitate. He understood that hesitation is feedback. If your brain isn't clear, the chart isn't clean. And if the chart isn't clean, the trade isn't yours. What happened next surprised even him. His win rate didn't just improve. His stress dropped, his patience grew, and most importantly, He stopped needing the market to obey him because he finally respected it enough to trade what was not what he hoped it would be. I don't need to predict anymore, he later said. I just need to recognize the moment the market invites me in. And that's the quiet power of behavior based trading. No fluff, no lagging signals, just price speaking loud enough if you're silent enough to listen. Ethan never clicked buy just because the chart looked good. He waited, he watched, and when the moment came, he didn't hesitate. That's what made him different. While other traders flooded into breakouts like a stampede, eyes wide, hearts pounding, sizing up full throttle like this was the one, Ethan approached every trade like a sniper setting up on a rooftop, calm, precise, and dangerously patient. Because for him, an entry wasn't just a trade, it was a statement of control. And control, to Ethan, meant never going in blind. He never entered full size. Not once. He didn't take the trade. He probed it, like a scientist running an experiment, like a soldier tapping the wall for traps. His first entry was never about profit. It was about information. Usually 25 to 30% of his intended size, just enough skin in the game to care, but small enough to stay detached. That first slice told him everything. Was volume confirming? Was the pullback orderly? Did the breakout trigger emotion or structure? If it failed, he cut it. No hesitation, no pain, no spiral, because he never risked more than he was ready to learn from. But if it held, if the price coiled around VWAP, if the 10-day moving average acted like a springboard, if the buyers stepped in and soaked up every dip, he added, deliberately, mechanically, without emotion. This was the core of his trigger system. You don't earn full size at entry. You let the market give you permission. Each ad wasn't an act of confidence. It was a response to behavior. He wasn't hoping the setup worked. He was watching it prove itself to him, one level at a time. And when it did, he scaled in again. That's how Ethan went full size, not in one motion, but in layers, each one validated by market structure, not adrenaline. He compared it to building a tower. You don't stack bricks on a shaky foundation, he once said. You test the ground, you pour concrete, then you build one level at a time. That mindset saved him, not just from losses, but from himself. Because most traders build their entire position on that first candle, that first signal. And when price wobbles, they wobble with it. They average down, they freeze, they get shaken out at the exact moment the real move begins. Ethan didn't play that game. He designed his entries so that even if he was wrong, he stayed alive. He preserved energy, capital, and most importantly, clarity. That clarity became his edge. Because trading isn't a game of perfect timing, it's a game of recovery speed. And with his sniper-style scaling system, Ethan never had to recover from deep wounds, only tiny cuts, each one painless, each one a lesson. But here's the part most traders never see. The same system that protected him from bad entries also amplified the good ones. When a stock did behave, when it confirmed, when it triggered cleanly, Ethan was already inside, ready, focused, with a small position acting like a scope. He wasn't reacting anymore. He was participating. And when the breakout exploded, he was already scaled in, full size, fully structured, emotionally neutral. This is how he turned ordinary setups into exceptional outcomes, not by predicting, but by preparing to add only when invited. He never needed to guess. He just needed to be there when the chart said now. One day, a trader in a forum asked him, "How do you know when to trust a breakout?" Ethan replied, "I don't trust breakouts. I trust my system's response to the breakout." That was the secret. He'd built a structure where the market told him what to do, not his emotions. Because here's the truth. Most traders want to feel in control. Ethan wanted to be controlled by process, not impulse. He even journaled his scaling process religiously. Entry number 1, $52.30, low volume probe. Entry 2, $53.1 reclaim of range high plus volume. Entry number 3, $54.60, breakout confirmed, sector leading, full size engaged. 3 entries, 3 confirmations, 0 panic. His entries looked like poetry, but behind every line was a brutal discipline, forged in failure, refined by iteration, and executed with surgical calm. It wasn't just what he traded, it was how he built it. Because position size wasn't a button, it was a conversation, a dialogue between him and the chart, between patience and proof, between aggression and control. And that's why Ethan didn't need 10 trades a week. He only needed a few, because when he struck with clarity, control, and confirmation. He was a sniper, and every entry was a trigger pulled with precision, not hope. You don't trade because you want action, he once said. You trade because the chart earned your attention, and then you pull the trigger like it's your last bullet. Ethan didn't fear red candles. He feared one thing, becoming the kind of trader who couldn't survive them. It's easy to look at a chart in hindsight and say, should have cut there, should have sized smaller, should have walked away. But in real time, when the trade is live, when your money's already in and your heart rate jumps with every tick, you don't have time to think. That's why Ethan built his rule. One rule, unbreakable, non-negotiable. Never risk more than 1% of your account, ever. Not 2%, not 1.5%, just this once. 1%, period. And if the setup looked perfect, still 1%, because no setup is worth destroying clarity for. At first, it felt limiting, small, too conservative. He watched other traders size up big and score massive wins, but he also watched them crash, hard. He watched their confidence turn to rage, then denial, then silence. And he realized it's not the red trade that destroys you, it's the red spiral that follows when your size is too big to breathe. When you risk 5%, 10%, 15% of your account on a single idea, you're no longer trading strategy, you're trading hope. And hope has no stop loss. Ethan didn't want to trade on hope. He wanted to think clearly. That was his real edge. So he sized his positions with one outcome in mind: emotional neutrality. Because when your position size is small enough to stay calm, you can follow your plan. You can exit logically, you can re-enter without shame, and that's where consistency lives. He developed a formula so simple, so boring, it felt almost childish. Account size 1% square stop distance equals position size. If a stock had a wide stop, he took smaller size. Tight stop, he could go a little bigger. But total risk, never more than 1%. No exception. And because he scaled in rather than all in, his first entry was often well below 1%. It gave him breathing room. It gave him options. But here's where it got interesting. Ethan didn't size based only on risk. He factored in liquidity, volatility, slippage potential. If a stock only traded 200,000 shares a day, he'd skip it or cut size in half. If it was thin and fast moving, he sized down because he never wanted to become the liquidity. And he never let his confidence blind him. Even after a string of winners, even when everything lined up, risk stayed fixed because he knew. Confidence is what gets traders to size up. Humility is what keeps them alive. This is why Ethan was still here, still trading, still growing when so many others vanished. Most traders focus on maximizing profit. Ethan focused on minimizing regret. He built a system designed not to chase windfalls, but to compound clarity. He understood the real cost of oversizing wasn't just losing money, it was losing perspective. Because the second your position size triggers your nervous system into fight or flight mode, you're no longer analyzing a chart. You're reacting to threat. You cut winners early. You hold losers too long. You start begging the market to rescue you. And the moment you beg, you're already broken. Ethan didn't trade from that place. He refused to. That's why 1% wasn't just a number. It was a boundary, a line that separated who he was from who the market wanted to turn him into. And it worked, because while others flamed out in emotional chaos, Ethan was still at the screen, calm, objective, present. He could take 10 trades in a row and still feel light, still have energy, still see clearly. Why? Because no single trade ever defined him. Not the win, not the loss, not even the missed opportunity. Every trade was just another iteration. Another brick in a system designed to last. And that's the irony. Most traders think big risk equals big returns. But Ethan knew small, consistent risk is what gives you the power to stay long enough to let your edge do its job. He didn't care about being right. He cared about being here, tomorrow, next week, next year. And slowly, his account grew. Not in explosive moonshots, but in measured stair steps. Because when your risk is constant, your execution sharpens. Your psychology stabilizes and your edge begins to breathe. That's what made Ethan unbreakable. Not some genius entry, not some secret setup, but a single rule: 1% risk, no matter what. That rule protected his capital, but more importantly, it protected his mind. You don't survive this game by being aggressive, he once said. You survive by being emotionally bulletproof. Most traders ask, what stock should I buy today? Ethan never asked that question. He asked, Where is the money starting to move before anyone else sees it? Because while others hunted for tickers, he hunted for narratives, for capital rotation, for themes that hadn't made headlines yet but were already whispering under the surface. He understood something most traders never grasp: stocks don't move in isolation, they move in packs, like wolves, led by attention, fueled by belief, and powered by liquidity. So Ethan stopped scanning charts randomly. He started scanning sectors. He tracked themes like a detective follows a pattern of crimes: AI, biotech, solar, semiconductors. He didn't wait for CNBC to tell him what was hot. He let price strength tell the story. Quietly, early, honestly. Each morning, before the market opened, Ethan pulled up his theme board. He'd check SMH for semis, TAN for solar, XLE for energy, XLV for healthcare, ARK for innovation plays. He wasn't just looking for green candles, he was looking for relative strength over time: 3-month, 6-month, 12-month. Is this sector outperforming the S&P? Are multiple names making new highs together? Is this just noise, or is capital quietly moving here? That was his edge, because by the time most traders noticed a sector heating up, Ethan was already building his watch list. He saw it first in the leaders, the quiet names that started to perk up before the theme exploded. One day in early 2023, while the world still debated whether AI was a passing trend, Ethan noticed something different. BigBear.ai broke a key level. Then SoundHound AA. Then a small cap called Good Food with a sketchy balance sheet suddenly doubled in 2 days. That wasn't luck. That was early signal. He didn't need a catalyst. He didn't need breaking news. He just needed price and volume, and three or more names in a single sector starting to breathe the same way. That's when he leaned in. Because when themes align, everything gets easier. Entries become cleaner, breakouts run longer, risk reward becomes asymmetrical. It wasn't about one stock, it was about surfing a wave, not standing still, but moving with the story. Ethan often said, don't chase a stock's past performance, chase the theme's current attention. Because in markets, attention is capital, and capital is fuel, and fuel moves price. Most traders didn't get this. They focused on one ticker, one setup, one candle. Ethan zoomed out. He saw sectors rotating like seasons: 1 month energy, next month AI, next a biotech wave off an FDA approval. He watched the environment, not just the setup, because if the tide wasn't moving, he didn't care how pretty the chart looked. He passed on hundreds of clean setups because they weren't in sync with any theme. And when a theme was hot, he pressed harder with confidence and clarity. I'd rather trade a B plus setup inside an A plus theme, he once said, than an A plus chart in a dead sector. Why? Because in hot themes, capital compounds, momentum stacks, conviction grows, and even if you miss one name, another is lining up right behind it. That's how Ethan built consistency, not by finding magic stocks, but by finding meaningful movement. He built a system around it. Every week, he'd rate sector strength from 1 to 10, note emerging narratives, track volume surges in smaller cap names before the large caps followed it. He called this his whisper list, because before themes scream, they whisper, and only traders quiet enough can hear it. That list told him where to look, but his system told him when to strike. Clean chart, structure forming, volume confirming. Then he moved. Not with fear, not with FOMO, but with precision, knowing that the theme itself had his back. And when the theme began to fade, he stepped back. He didn't try to force trades. He didn't argue with momentum. He just watched, waited, recalibrated. Because Ethan knew this brutal truth. Most losses don't come from bad charts. They come from trading in dead water. And that's what separated him. While others clicked randomly through tickers, hoping to get lucky, Ethan was following the money, with structure, not stories. He didn't chase hype, he read flow. He didn't need to be early, he just needed to be aligned. That's what made the difference. Because when you trade inside a theme that's alive, even your mistakes bleed less. Even your pullbacks recover faster, and your confidence stays intact. Not because you're right, but because you're swimming in the current, not against it. It's not about predicting the wave, Ethan once said. It's about paddling into the one that's already rising. And when you trade like that, you stop hunting tickers, you start surfing themes, and the market begins to feel less like a battlefield and more like a rhythm. Before Ethan entered a single trade, he asked himself one question: can I hold this without second guessing every candle? If the answer wasn't a hard yes, he skipped it. No matter how hot the theme was, no matter how strong the breakout looked, no matter how many others were chasing it on Twitter. Because to Ethan, chart structure wasn't just technical, it was psychological insurance. He believed messy charts led to messy decisions, and messy decisions broke traders. That's why he built his system around one brutal standard: if the chart isn't clean, I don't touch it. But what does a clean chart actually mean? It's not about looking nice. It's about clarity, smooth trend lines, predictable pullbacks, no overlapping chop, no hidden landmines from 3 years ago, no wicks that look like lies. It's a chart that breathes with rhythm, that shows structure you can trust, that tells a story clearly, honestly, confidently. Ethan called these charts easy to hold because in the heat of battle, when your heart rate spikes, when the trade turns against you, when you're unsure whether to add or cut, you don't want to interpret chaos. You want to follow form. Clean charts gave him that form. They gave him peace of mind. Because when the setup is clean, you don't waste mental bandwidth on guesswork. You don't flinch on a red candle. You don't hesitate when price pulls back into the 10-day. You know where structure lives because you can see it. Compare that to a messy chart: erratic wicks, overlapping candles, fakeouts layered on top of fakeouts, volume that surges without conviction, resistance hiding like ghosts from 2021. Ethan stayed away from all of that because he knew if I can't hold it in peace, I can't scale it with confidence. And without scale, there's no edge, no growth, no real compounding. That's why clean charts weren't optional for him. They were foundational. He believed every candle told a psychological story. Clean charts meant accumulation by smart money. They meant order. They meant someone with size was in control. And if they were in control, he could ride with them, not against them. He wasn't just trading price, he was aligning with behavior, structure, intent. Ethan often said, I don't want to fight the chart, I want to flow with it. And messy charts were fights. Every tick an argument, every candle a courtroom drama. Clean charts, on the other hand, they whispered, trust me, the story is already being written. All you have to do is follow. That whisper was what Ethan waited for. He knew that clarity wasn't just technical, it was emotional. Because here's the real truth: most traders don't lose because they're wrong. They lose because they can't stay in the trade long enough to be right. They panic, they hesitate, they micromanage. Why? Because the chart never felt trustworthy to begin with. And that's what Ethan avoided religiously. He once skipped a biotech setup that was up 300% on an earnings beat. Perfect theme. Strong volume, everyone was jumping in, but the chart full of overlapping candles, gap ups that got sold, inconsistent range, no trend line worth drawing. Ethan walked away. 2 days later, the stock collapsed 40%. And in his journal, he wrote, the edge wasn't skipping the trade. The edge was entrusting my standard even when the world screamed otherwise. That standard kept him safe. But more than that, it kept him centered. Because when your chart is clean, you know where to enter. You know where your stop belongs. You know what invalidates your setup. There's no ambiguity, no noise, no guessing. And when there's no guessing, your mind becomes quiet. Your breathing slows, your execution sharpens. This is the doctrine Ethan lived by: clean chart, clean mind, clean trade. And over time, that discipline became his advantage. While others burned out chasing volatility and chaotic setups, Ethan stayed patient, waiting for the market to serve him structure on a silver platter. Sometimes he'd go days, even weeks, without placing a single trade. But when the clean one came, he struck, precise, with no hesitation, because clarity removes fear. And in trading, the absence of fear is the rarest alpha of all. The market already tells you what to do, Ethan once said. The problem is most traders are too distracted by clutter to hear it. So he cleared the clutter, he killed the noise, he chose structure over stimulation, and in doing so, he found peace inside chaos. That was the doctrine. Not complex, but uncompromising. Because in a storm, you don't need more information, you need a clean compass. And Ethan's was the chart: clear, clean, and silent. So now you've seen it, not just a strategy, not just a checklist, but a mindset. a system, a way of becoming. Ethan Park didn't win because he was smarter. He won because he designed a system that fit his psychology better than the market could ever break it. He didn't trade to be right. He traded to be in rhythm with the structure, with the theme, with himself. He didn't chase setups, he trained for them. He didn't predict momentum, he waited for it to invite him in. And that's why his $5,000 wasn't just capital, it was the cost of transformation. The truth is, there is no holy grail, no magical indicator, no guru signal that will save you. The market doesn't reward strategy, it rewards alignment. So ask yourself, are you trading a system that fits you or one you copied from someone else? Are you scaling because of structure or out of fear? Are you risking to grow or risking to feel alive? Because trading isn't a test of knowledge, it's a test of identity under pressure. And until you stop trying to force the market to respect your strategy, you'll never learn to respect your own limits. But if you're still here, still watching, still breathing through the pain, still trying to build something that lasts, then maybe you're ready. Ready to stop chasing, ready to start crafting, ready to step into your system designed for your temperament, your wiring, your edge. Because the edge was never in the chart. It was who you became inside the trade. If this video spoke to you, drop a comment below. I'm building my system. Let the world know you're not here for hype. You're here for mastery. Subscribe if you're ready to go deeper into trading psychology, system design, and the quiet mindset behind real success. This isn't a channel for gamblers. It's for builders, for craftsmen, for those becoming someone the market can't shake. We'll see you in the next breakdown. Until then, trade clean, trade calm, trade like it's built for you.